yeah, work away. So I think I'll just maybe talk a little bit about what's been happening, I suppose, on this side of the fence. Um, I think that a lot of people have, like I was saying, concerns about the digestibility of how the protocol has been put forward. And I think many of us are looking at the protocol and trying to understand it as best we can. In a scenario where we are doing it in theory rather than actually practically. And I'm really excited to chat about some of these things, to kind of ask a few questions and to obviously hear from you as well. A few people have sent me some questions, which I'm going to bring forward. And then there's a couple of people that would like to come up and ask those questions themselves. So, we're purely not talking about price action or anything today. We're just talking about the protocol, how it's going to roll out, explaining it a little bit in more detail. And this is for the whole longevity of the project, that we can understand and move forward together in a positive way without the scaremongering and the rumors and all the stuff that's been happening, I suppose, on Twitter recently. And yeah.
Awesome. Yeah, and thanks for hosting this. And it's nice to meet you and to actually speak to you. I don't think we've ever directly gotten to speak before, so I appreciate the opportunity.
Yes, same. I think maybe one or two questions. That's all I ever got that far. But I think this is. I just no. There's a lot of, I suppose, uncertainty. And I think it started off with that tweet that I had said, that that I had worded it completely wrong. First of all, I'm going to say that I know that the protocol and the fundamentals of reserve are the exact same and nothing has changed. And I think that for me, my first question, I suppose, was, with arbitrage, we understood that the burning of ORSOR was obviously going to increase the value, and that it could be minted at any time. And I do understand that that was something if there was an issue with defaulting. With the new, I suppose, protocol, and you've got staking of ORSOR on your ORSX or your OR tokens that can be created by anybody. I feel there's a few anxieties around people selling ORSOR. Is the staked tokens actually part of the circulating supply, or when they are locked into an OR token, are they locked away as in like the slow wallet kind of? I suppose that's my first question.
Yeah. So I think it's gonna, like, because this is a very complicated subject, and because we have like a lot of listeners here, and I want to try to answer your questions and try to help make things clear for you directly and also for the other people on the line. Why don't I do this? Why don't we start with a high level overall explanation, and I'll kind of go through some of the things that I mentioned in the thread, actually, because this is a format where I can actually maybe add more color and context and detail to those explanations. And that might answer your question. And then if it doesn't, then let's go through a series of questions to try to like uncover anything that's not clear. Okay. And does that work for you?
Yeah, I love that. That's great. Yeah, I
Okay,
really like
cool.
that.
Okay, and then feel free to stop me as I go if there's something I say that doesn't make sense, for a little bit more discussion in that area. So, um, so as I started this thread with, and as you also just mentioned, the overall economics are fundamentally the same for RSR in the reserve protocol and with the old version and the new version. So let's start off by talking about the old version a little bit, like the basics of how it worked, so that we can make that comparison. So in the old version of the reserve protocol, if so first off, let's look at the insurance component, right? So if there was a stable coin where our original plan was just to have one stable coin, um, and its collateral assets defaulted, or one of them defaulted, then essentially the protocol would handle that by minting more RSR and selling it into the open market, sort of however much it would need. And one thing we worried about back in the day was like, well, what if it just keeps minting? Maybe there should be some limit or something. But in any case, however you do that, there's some amount of minting. And so basically all RSR holders together basically cover that cost. They end up paying because obviously if you mint and sell a bunch of RSR into the market, that'll probably cause the price of RSR to go down. And so that kind of was the original insurance mechanism baked into the protocol. And the way I thought about it, the RSR token, like one of its main economic purposes was to provide that insurance. Now, then there's the flip side, right? There's the way that the RSR could have been burned in that original protocol. And so the way that that works, like fundamentally, the burning of RSR is always driven by some source of revenue, right? Like you have to have income or revenue from somewhere for there to be capital available to distribute to RSR holders in some form or other. And so I'll skip over the details of that for now because this is already complex enough. But basically, suffice it to say, reserve stablecoins can generate revenue, whether it's through transaction fees or returns on lending out the collateral, or there's a couple other mechanisms. And those mechanisms didn't change from the old version to the new version. So once a reserve stablecoin has revenue, now, here's where things are mechanistically different. So in the old protocol, the way that that revenue would get distributed is kind of implicitly through the arbitrage process, okay? So basically, revenue would accumulate, and the protocol would hold those revenue assets, and then periodically, if the price of RSR was above, RSV was above where it was supposed to be pegged, then instead of the protocol allowing people to mint new RSV by locking it up with collateral, it would allow them to basically purchase the revenue capital, the revenue RSV that was sitting there captured with RSR in order to distribute that out into the market. So that was a way where RSR holders could play a role in stabilizing RSV in the downward direction. So this wouldn't apply in the upward direction. This is just if the price of RSV was too high. And that was a way in which that revenue could implicitly get distributed to RSR holders because of the fact that when people would buy that revenue RSV, it would burn RSR. Now, if these details are confusing, that's okay. But basically, the upshot of that is that when the protocol generated revenue, it would then use that revenue to buy RSR, and it would burn the RSR that it bought. And so basically, similar to, you can look at like Binance, they buy BNB and burn it with the revenue from Binance. It's a sort of a similar model to kind of the exchange token buy and burn in terms of those fundamental economics. And so there's a lot of reasons why we did it that way instead of other methods of distribution. So that's kind of like setting the stage for the comparison. Do you have any questions about that or any things you think I should clarify for our listeners before we go into like making that comparison to the new version?
No, I'm happy with that. I
Okay.
understand
Yeah.
yeah. So
Yeah.
go ahead.
Yeah. We did a better job explaining the prior version than we have the new version. So I think that's not where the confusion lies.
True,
And I own
true,
that. So okay, so now let's start to talk about some of the reasons for the change, some of the things I mentioned in the thread, which I think are really cool and really exciting, and I really want people to understand them. So in the new version, instead of like one thing that's a little bit off about the old version is that through that buying and burning, there is kind of distribution of that revenue to the RSR holders, but it's somewhat indirect, right? Like, it could actually be that if you buy a bunch of the token and burn it, that the price of RSR doesn't go up, right? Like maybe you're in a bear market and lots of people are selling RSR and more people are selling than the protocol is buying, the price could still be going down, right? And it could be that that value doesn't get directly distributed to RSR holders. On the flip side, it could be that people get excited about the buy and burn mechanism that causes more people to buy, and then the price goes up even more than the revenue. So it's kind of this indirect, sort of blunt instrument where, yes, it kind of does distribute the value to the token holders, but in a diffuse way, in a way that's indirect and sort of not precise. And that indirection and non-precision, it can be okay, but one thing that I always disliked about it is that it makes it so that, if you're if you're managing an enormous amount of capital, if you have, let's say hundreds of millions of dollars under management, and you're thinking about allocating it to this mechanism, you have a harder time forecasting what your return is going to be. You can't just build a model and say, okay, here's what the revenue of the reserve protocol is going to be in my estimation, and I'll get my portion of it. And so I can see exactly how much that's going to be. It's like, well, this amount of RSR will be bought, and in theory, that will end up changing the price of RSR, and I'll have, this kind of return. But it's always a little bit wobbly. You're just not really sure. Whereas if you had a mechanism where the RSR holder could just directly receive their portion of the revenue, then it would be really solid. Then you could like build a spreadsheet and be like, oh, okay, this is my fraction. I can just count on getting this fraction. And I don't know exactly what the revenue is going to be, but I can make an estimate about that and actually be more confident about taking that kind of financial position. And so that was one motivating force for me in the background. That this is above and beyond even the things that I mentioned in the thread. But so when we started, okay, so that's one piece. Another piece is that if you use this mechanism where all RSR holders are affected in the positive or negative direction by revenue or default, it has a really important consequence that we ultimately decided was a problem. And that consequence is that it means that all reserve stablecoins are connected exactly the same to all RSR holders. And if your plan is just to have one reserve stablecoin, that's okay. That's not really a problem. But once you start to see reasons to have many different stablecoins using this platform at the same time, it starts to become an issue. Because then you have a situation where if there's any stablecoin that defaults, it could hurt all of the RSR holders. And so you have to worry about every single stablecoin that's on the platform. You can't be open about it. You can't say anyone can come create a stablecoin. Instead, you have to be very careful about governing, like, no, we can only have very conservative stablecoins, maybe only stablecoins created by the core team or by like an approved set of governors or whatever, because any default would affect all of the RSR holders. So we have to be really careful about it. And so as we were thinking about the future evolution of the protocol and thinking about the challenge of, well, how do you really figure out the optimal non-fiat currency? We became convinced that it's a whole lot better if you can allow anybody to come create a stablecoin of this form on top of this platform using RSR, using these mechanisms, without having to police them. And an inspirational example for that for us was Uniswap, where like because of the fact that anyone can go deploy a pair on Uniswap, at the time that we were thinking this through, there were 35,000 pairs on Uniswap, which is just so cool. It's so cool that you can just let people come and experiment and see what picks up steam. Obviously, a lot of those pairs don't have a whole lot of usage, and that's okay, right? But the point is that the crowd was able to discover the pairs that people really did want to trade. And similarly, we want to allow a big community of people to work together, well, not even work together, work separately, work independently to discover which baskets of assets and which governance protocols really are the best for the type of non-fiat currency that we want to exist on top of the reserve protocol. So basically that led us to a design challenge, which is like, okay, how do we make it so that RSR still plays this role of ensuring reserve stablecoins without making it so that every RSR holder is subject to the risk of every single reserve stablecoin? And so that is where the modern design was born from that design challenge. And so we realized, okay, we can actually allow RSR holders to choose which reserve stablecoins they want to profit from. And by making that choice, they're also choosing which reserve stablecoins they want to be exposed to, they want to take on the risk from. So the way that the new protocol works, in simple terms, is basically as an RSR holder, so first off, anyone can create a reserve stablecoin. They can deploy it with our smart contracts, or they will be able to once this is live. And they can decide the basket, they can decide the governance mechanism, they can set the parameters initially, and then the governance mechanism will tune that over time, however they determine. And then as an RSR holder, you can look at all of these reserve stablecoins that get created. And at the beginning, it still will probably only be a few. It's going to take time, I think, for more stuff to be tokenized and for more reserve stablecoins to make sense. But I do think the number will keep growing over the years and over the decades. And so you'll be able to look at reserve stablecoins that exist and decide which you would like to stake your RSR on. And when we say staking, we really do mean putting at stake. Here, you are basically deciding, okay, my RSR is going to back these reserve stablecoins and not any of the other ones. And when you do that, you then get your rights directly to the revenue from any of those stablecoins, or from all of the ones that you stake on. And so one thing to keep in mind here is that if you were to go and stake your RSR evenly across, or proportionally, I should say, across all of the reserve stablecoins that have been deployed, now you have the exact same exposure that you would have with the earlier protocol. Um, Hold on, I just need to take a second and try to kill a mosquito that's in my office. Oh, I got it. Okay. I realized I'm like pacing around trying to not be bitten by this mosquito. It's like, all right, let's just take care of the mosquito. um, okay. Luckily, it was easy to get.
Okay,
um,
good.
so yeah. So basically, if you stake across all the stablecoins proportionally, then you have the same outcome, right? Because if any one of those stablecoins has a default, you're subject to that. You'll take losses from that. And if any one of them has revenue, you'll get your portion of that revenue. It's actually still more direct, like I said, because what you're getting is sort of more like a salary or a dividend. I would say it's a little bit more like a salary because you kind of have to do a little bit of work in making these decisions to get it, rather than there just being a buyback. But I think that's actually better, again, for the reason I mentioned before, because if you're a big capital allocator, you can financially model that more confidently. You can say, okay, we're going to allocate our capital this way. And if this is the usage of reserve stablecoins, we can see exactly how much money we're going to get from that. So the point there, that I think a fundamental thing, just to make sure it's clear to everybody who's listening, is that basically, like, let's do an example. So let's say that with all the reserve stable coins, let's say that there's, I don't know, let's say there's $100 billion worth of reserve stable coins in circulation. I like to use big numbers because, like, when I'm thinking about this stuff, I'm thinking about the success case. I'm thinking about that further out future. I think it could be a lot bigger than 100 billion in the short term. Obviously, it'll be smaller, but I'm going to use that number. Not trying to make any claims about what's going to happen with the market and with reserve stablecoins, but just because that's like the level that I like to think about it. So let's say that there's $100 billion worth of capital backing the reserve stablecoins. So there's like $100 billion worth of stablecoins in circulation. And let's say that they end up generating, on average, like across all of them, 2% revenue for the RSR stakers that are staking on them. So let's see, let's do the math on that. So if it were a billion, that would be 20 million, so it'd be 200 million. That'd be 2 billion. Yeah, 2 billion. So $2 billion in revenue for the RSR stakers per year. Okay. And so with that $2 billion in revenue, with the prior version of the reserve protocol, that 2 billion in revenue would basically be used to buy and burn RSR. So you'd have $2 billion worth of buying pressure on RSR throughout the year, and that RSR would be burnt. Now, in the new protocol, that instead, that $2 billion is distributed directly to the RSR stakers. So the RSR stakers at the end of the year, they still have all of their original RSR, and they have $2 billion worth of additional value that they directly received. And so there's a question, that it's kind of an interesting open question of like, well, which is better? Would you rather have $2 billion worth of the token bought and burned, or would you rather just be given the $2 billion directly? And I think that there are maybe different people might have different answers to that. Obviously, you can see from my earlier statements, like what my answer is. I think that receiving the $2 billion directly is actually better because then you can just tell, like, okay, I just know exactly what the value of that is, versus if there's $2 billion being bought and burned, well, you don't really know exactly what the impact is on your own personal financial position. Could be better, could be worse. So so yeah, so there's a few more things to go through, but let me pause for a second there. Neve, do you have any questions about that, or what do you think of that? What's your take on that?
So I think for me, when I originally was very, concerned about the switch from arbitrage to this new staking model, I think it was kind of that set and forget with the arbitrage. If you could just kind of set it, and then it's now evolved into basically a lot more. It's more work, and I understand that we are more involved in terms of what tokens we can stake against, which or tokens we like, if we like the assets in the background behind them. And I think a question that I had was, is the analytics behind or tokens? I mean, there's probably going to be hundreds of them in a year or two or whatever, because anybody can create. But the analytics behind that, is that on the onus of the creator of the token, to explain what kind of assets they're using with these or tokens, or will Reserve be doing analytics on kind of like their favorite ones, or ones that they see have some kind of potential in the exploration of finding the perfect basket of assets, I suppose?
Yeah, that's a good question. I think this is a worthy topic to discuss. Of you know, basically by having lots of R tokens and requiring that choice, it really is requiring more work from the RSR holder. And like, is that a good thing or a bad thing? And how's it going to work? Um, to answer your immediate question, um, the way I think about it, reserve stablecoins have to compete for RSR stakers, right? Because if a reserve stablecoin wants to have insurance, then it needs to have RSR staked on it. And so, in terms of, well, where's the onus to sort of make clear, what the assets are and why it would be a good idea to stake on that reserve stablecoin, that's essentially up to the governors of that reserve stablecoin, or even the users of it potentially. And if you create it in such a way where you have any sort of advantageous financial incentive to have created it, like you're taking a large position as a staker, or you've even like directed a portion of revenue to yourself or your DAO or something, then you might have an outsized incentive to do that. So that's like a little bit of a vague answer, but kind of the way that this is designed is intentionally pretty open and flexible. So there will end up being, I think, many different governing configurations for our tokens. And so, like in some cases, yeah, like you'll probably see like forum posts from me or other people on the reserve team being like, right, here's how we think this should be set up, or here's how this is set up. Here's why we think this particular collateral token is safe, even though you might think it's not. We paid this auditing firm to check this thing or whatever. But there will certainly be many R tokens, probably most of them, where we didn't create them, right? Like, part of the point is making a platform where we don't create many or possibly even any R tokens, because it's open for anyone to do it. So just because an R token isn't created by us doesn't mean that we can't run our own analytics and discuss it and comment on it. And I think we will often for many of the popular ones. But I think it really is likely to be an effort that is distributed over like many people and many different organizations, not something that we just do ourselves. And so I think that that is both, like, there are positives and negatives to that approach. I think that if we were to just say we're going to take full responsibility, we're going to make everything neat and tidy and clear, then that might make it a little bit easier for RSR holders to be like, okay, we'll just look and see what they say, and then we'll do whatever they recommend. But the problem is that then it's really just dependent on what we have the bandwidth for, and what our worldviews um, basically support or condone. Where it's like, well, if we start off thinking that this is the right way to do it, then we might not try other things. And so part of the point here is to allow the community, as it grows over time, to try things that would have not seemed like the best thing to try to us, because maybe we're wrong, or maybe we're ignorant to different possibilities of backing or governance designs. So zooming out on that question, I think that from the very beginning of the project, there was always this looming question about how is decentralized governance really going to work? And we said from the very beginning, well, we don't know. We decided to start this project and sort of throw our hat over the fence, knowing that that would have to be figured out, and knowing that we didn't know the answer at the beginning. And I think that, and just to talk about the need for decentralized governance, it's like, imagine it's 10 or 20 years from now, and you're you're someone who's in charge of a treasury for like a small nation, and you're like, should we put some of our capital in this non-fiat R token that's pretty popular? It seems like maybe a good hedge against fiat currencies that could have issues. Well, if that's governed, if that currency is governed by a startup out of San Francisco, you might be like, yeah, I just don't really trust this like one random startup out of San Francisco. I guess it'd be a developed financial company by that point, but still, it's something where if you're really looking at capital on that scale in the world, political neutrality starts to really matter. And so if we can find a way for these things to be governed where you can tell, you can be confident about how the thing's going to be governed, how it's going to progress. You can be confident about the competence of the governance mechanism. And you can also be confident that, sort of more similar to like Bitcoin or Ethereum, it's not a situation where you're going to be subject to like political forces, political pressures. I think that that's really valuable. And so this aspect of how we're building the protocol, where RSR holders end up having to choose which R tokens to stake on, it's actually kind of an element of governance. It's not quite it's not quite the same thing as like making decisions about the particular basket of a particular R token, but it is kind of a market-based governance mechanism where it's like, well, if the assets in this R token's basket are changed to be something that actually contain a substantial amount of risk, then RSR holders are going to unstake, because the word is going to get out one way or another that that's a risky thing to take a bet on. And so that's actually sort of a market-based governance mechanism that's implicitly built in, where it makes sense to try to make sure to not make your basket too risky, because you're having to think about, well, we don't want the R token holders to redeem, and we also don't want the RSR holders to unstake. So with all of that said, let me like say some simpler things here. Like, as an RSR holder, you could just stake your RSR on like the top couple R tokens that are pretty clearly established by the market to be popular and safe. Lots of other people have staked on them. And so you can basically then have like the same like rough financial situation as would have existed with the prior protocol, right? Because it's like, well, these are the simple, conservative, safe ones that probably would have existed with the prior protocol. You can get that exposure to them in terms of revenue from them, and very, very minimal risk of having to cover a default. Or if you want to be more active about it, you can chase yield, right? So you can go stake your RSR on other R tokens that are maybe more experimental, maybe more speculative, but might make you more money, right? So basically, it actually doesn't, I think, really remove that possibility of taking the easy path and just being exposed to like relatively conservative R tokens. You still have to make that choice. Like you don't, it doesn't happen just by default. So you have to make that basic choice. But I think that we've seen with DeFi that there are a lot of capital allocators, whether they're individuals with not very much money or institutions with large amount of money, that are willing to do that work, that are willing to think through and decide, okay, actually, we want to allocate to this thing that's a little bit new and a little bit weird because we think it makes sense financially and we think that we can earn a good return on it. So to summarize, like I think that it does require some work, but you can sort of take the easy path or the more complicated path. And I think the easy path is not that different from the prior expectation of the protocol. Um, but there's one more thing that's worth saying here, which is Reserve wasn't really ever meant from the beginning to be a centralized company that would last forever, right? Like many crypto projects, the goal on the protocol side of things is to sort of put ourselves out of a job and get to the point where the protocol is truly decentralized and and can't be turned off no matter what, where sort of it's out of our hands. And for that to be the case, it has to be not dependent on us. So if we bake it in such a way where it requires ongoing attention from a centralized company forever, um, I think that that's I think that bad for that's just bad for the overall outcome that can occur here. It limits the possibilities. I think you really can't have something that becomes a world currency if it's just governed by a single company. And I think it adds risk because you have to like pass control of that company over the generations. But it's also sort of hard to know how to talk about this in public. But like from a legal perspective, that's sort of a non-starter for a cryptocurrency, right? Like it's important that a crypto network like this not be governed by a single centralized body. I guess I'll leave it at that. And so I think that this conclusion is sort of the appropriate way to implement that. And like I said, I think it leaves RSR holders that level of choice of like, do they want easy mode or do they want hard mode?
Cool, because it's basically like it's more resistant to like censorship and stuff like that,
Definitely.
and more decentralized. Okay,
Definitely.
okay,
Yep.
perfect. Can I bring somebody up for a quick question? Is that all
Sure.
right?
Sure. Go for it.
Okay, cool. I'm just gonna bring Sloan Ranger up first because he was first request there. Go ahead and ask away.
I think you're muted.
I
in
was
case
I
you're.
was muted. Sorry,
Yeah.
apologies. Hey Nevin, how are you doing? Happy Sunday.
Hey, happy Sunday.
All right, Nevin, just on a few things that you said, I have a few questions about the protocol with regard to the staking side of it. Okay, I have
Okay.
other questions. Do we need to transfer from our wallet to a portal, a reserve portal, and is there going to, how do the gas fees look there? Is there a reserve fee for doing so, or does it stay in your wallet? That would be my first question there.
Okay. So the way that it works is that it's a little bit like using compound finance. So you deposit your RSR into the relevant staking contract that's attached to that R token, and in exchange, you get another token that's also an ERC20 token. That it'll be a different one for each R token because that token represents your staked RSR balance. So you can, let's call that token staked RSR. It's Again, it's a little bit confusing to call it that because it's not like there's only one staked RSR token. There's one staked RSR token for every single reserve stablecoin. So you deposit your RSR, you get that staked RSR token, and then that sits in your wallet. You can just hold that token in your wallet, and over the course of time, as your staked RSR generates rewards, generates revenue, your staked RSR is worth more and more RSR. So, the percentages could vary widely depending on the R token. But basically then, let's say you wait a year, however much that APY was, you'll end up being able to redeem for that much more RSR in a year. And the reason why we decided to tokenize that position is because the default is you'll just hold that in your wallet, but you can also then take it and use it elsewhere in DeFi. So you could go post that as collateral. You could go trade that, right? So if you want to redeem your staked RSR for RSR, there's a delay on that. And that's necessary for how the protocol works, for how the insurance mechanism works. But if you decide you want to exit that position, you could trade that staked RSR position on a DEX, for example, for something else. And someone else would then take on that staked RSR position, and they would then be subject to that withdrawal delay to get RSR out. So that's kind of the basics of how that staking mechanic works. And you asked, kind of, would that be through like a portal somewhere? How would that work? Well, we have commissioned the development of an initial front end for this, which will cover all of these functions. So you'll be able to go to that front end, which is, it'll be a website. You'll be able to go there, connect your wallet, and do these operations. But this is all just a set of smart contracts. So anyone can develop a front end for that. And so similar to how some people go trade on Uniswap, just by going to the Uniswap website, but you can also trade through Uniswap via Argent or Zerion, or all sorts of different applications can plug into those same smart contracts. And the same thing is true here. So it could be that in the future, that initial front end that we're commissioning, that may or may not be the main place where you would go to do that. If there's some other application that you like better to interface with the smart contracts, you can use that instead.
Are those contracts subject to gas fees?
Yes.
Yeah.
Yes, this all happens on ETH L1. And so, with ETH2, or it's not quite called ETH2 these days, but we expect those fees to go down, but not down to nothing. So it's you wouldn't want to stake and unstake every day. You want to sort of think about it and make a decision, pay those gas fees to generate that stake position, and then stick with it for a while.
Okay, thank you. My second question goes back to, I suppose, the old protocol, where there seemed to be a lot more of a correlation between RSR and RSV. But now it seems RSV will no longer have really a correlation because there's no yield in RSV. Is that correct?
Well, yeah, it's a really good question. And let me say a few different things about this to try to help clarify this for people. So, we had the same challenge from day one with transitioning from the current RSV to the new protocol, whether it's the old design or the new design, which is like, well, how do we do that transition? Because obviously we built RSV to be very simple, centralized governance, and no insurance. And so I think a common question that people might have is like, well, if people are using RSV in the app and that's not connected to the new reserve protocol, does that mean that all of the app usage has no meaning for RSR holders and possible future staking opportunities? And I think the best way to talk about that is to just look at like, how is this going to work in the long term? Because there's a few different possible routes that could be traversed to get there, but I think the long-term conclusion is very clear. So in the long term, I expect the current RSV to not be very popular because it has no revenue mechanism. And if you have no revenue mechanism, then you really have no way to incentivize decentralized governance. And we as a project are interested in producing currencies that are governed in a decentralized way. So like in the reserve app, you can think of as a way to use, like in the long-term future, as a way to use R tokens that are built on the new reserve protocol. And those R tokens will generally be governed in a decentralized way. And in order to do that, they'll generally need some source of revenue. So even though we are using RSV with the app today, that doesn't mean that that will be the case forever. And in fact, I think it just certainly won't be. So what that means is that like users of our app will end up using R tokens that do have a revenue mechanism. And so in general, you will be able to stake your RSR on R tokens that are in use within the Reserve app, as well as R tokens that maybe don't get featured in the Reserve app if they're not suited to that particular user population. So, to sum that up, it's like basically there will be a transition from RSV to R tokens, and R tokens will generally be built to have a revenue mechanism. And so you can think of RSV as sort of a beta phase that will be phased out over the course of time.
Okay, thank you.
Yeah.
Okay, thanks for that, Stone Ranger. I'd say in Flamingo Mafia has a question there if he wants to come to the floor there.
Yeah, hi. Can anybody hear me?
Yep. Hi.
Perfect.
Awesome. Hi, Nevin. Really awesome to speak to you. I think it's the first time. But
Likewise.
So my question was regarding kind of relating to what Neve had said previously. Correct me if I'm wrong, but I think I heard you mention a while back that they'd be like kind of a dashboard for people to see all the tokens or the R tokens that are created, kind of like a general risk reward type thing that you can kind of get a better feel for, where you want to place your money.
Yep. Yeah. So the initial interface that we're commissioning that I just mentioned will allow you to see the R tokens that exist. And there's a number of different things that you might want to see about an R token as a staker or potential staker. You'd want to look at, okay, well, what is it backed by? Does that seem risky or safe to me? You can also see the backup collateral assets, which are basically what the R token would switch to if there was a default. So, anytime there's a default of an R token or of a collateral asset, there's basically predetermined backup collateral assets that the R token is able to switch to. And so you can also inspect those. But the other basics that you would want to look at are, well, what is the current staking APY, right? Like you can just see, I think in the dashboard that's being built, the default is you can see like, well, based on the past 30 days of collateral asset performance and the amount of RSR staked, what is the approximate annual APY? And so you'll be able to decide, okay, like, this one has higher APY, this one has lower APY, and they seem to have similar risk. So you could stake on the one that's higher, right? And so, so basically there will be this initial dashboard that we're commissioning, but again, all of the data is just being sucked out of the smart contracts, and being pulled from information that's available on chain. So other interfaces can, and I think will probably be built to look at that as well. You don't have to use the one that we're initially building.
Right. Okay. Awesome. And I think I probably know the answer to this, but for when governance gets implicated by each individual R token, would there be this? I guess how do I word it? Would each R token creator be responsible for where RSR stakers go to vote on governance, or would it be like a kind of general dashboard that people go on? I assume each individual R token will have their own governance model.
Yeah, so basically there's a default that we're establishing at the beginning, but there is full flexibility. So the default that we're establishing at the beginning is basically just borrowing from existing DeFi industry best practices. And I use that term a little bit lightly because, as you might know, I'm skeptical of current governance protocols, and I think they need to be improved. but I do think that they're good enough to start off with. And so what that means is that the initial default for decentralized R token governance is very similar to how compound governance works. And that's basically one token, one vote. In this case, it's if you stake your RSR and you have staked RSR for a particular R token, you actually use that staked RSR to vote, not normal RSR. And that's to make it so that only the stakers on an R token get to vote on governing that R token, which kind of makes more sense. In terms of the interface, I think that's actually a cool example where with that compound governance model, because a number of projects have adopted it, there are several different interfaces. So you can actually use different websites to go and vote on protocols that use that governing mechanism. There's one called Tally that we think is the most natural to point people to. So for initial R tokens that we're sort of helping the community create, I expect that you would go look at the dashboard that we're commissioning if you want to see the details about it, and then there will be a link, probably to Tally, where you can go and make those voting decisions. I say probably, like that is how we've currently designed it. But like if the community wants, if the community ends up really liking a different dashboard, maybe we would link to both of them or something. And we could also build out a full voting dashboard based on like integrated within that application I've been describing. But why do that?
हेलो
Like
दोस्तों,
these existing interfaces that are
करेगा
third
और
party
शी
are
बिजनेस
quite good already. So that would be the
में
default. But
कुछ
like you
ऐसे
said, if somebody creates a new R token, they could connect it to a different governing mechanism, and that would not necessarily be compatible with Tally or any of these other similar websites. And so, I expect there to be experiments with entirely new front ends built in order to accommodate those different governing mechanisms.
Okay, yeah, I definitely understand that. Thank you. Just one final question regarding the when you stake your RSR, you said you receive,
Hello
say,
and welcome
staked
guys to your
RSR.
favorite YouTube
Yeah.
channel
Do
Unique
you
Earning.
is
Today
that
in this video I
is that
am 0
wrapped RSR
buy
sort
and
of
sell
that where the
uh,
value
so
goes up, but the
this
amount
event
of
can
RSR
draw.
doesn't go up when you have that in your wallet?
So it's a little bit more than just wrapped RSR, because the exchange rate between your staked RSR and RSR will change over time as you earn rewards. So let's say that I'll just make a simple example. Let's say that you stake your RSR, and at that time the exchange rate is, say, 1-to-1 between staked RSR and RSR for that R token, because it's like the very beginning. And then let's say you get 10% return over some period of time, and then you unstake. Well, then you would get 1.1 RSR for every staked RSR token. That changing exchange rate sort of is the expression of that revenue that you've been earning.
Right. So when you receive staked RSR back after staking, like the amount of staked RSR you have won't go up, just the value when you exchange for RSR, right?
Right. Yeah. So when you're holding staked RSR, the number of staked RSR tokens you have stays the same. It doesn't change. It's just that they become worth more RSR every period, every like reward period, which I think will be weekly. I see Taylor is in this channel, so Taylor, I don't know if you want to jump in and comment on any of these details or not. I think I'm getting it right, but you should raise your hand if I say something that contradicts the way you guys are implementing the details.
Okay, yeah, and just to maybe make it simple for people that might not understand. So if you have one RSR and you stake it and you get, let's just to make it simple, one back, when you go back to unstake your RSR, you could get back, like it shows you have one staked RSR, but when you go to unstake, you could get 1.5 back or 2 back.
Yeah, that's right. And so like the interface that we're commissioning shows that to you. So you can see at all times, okay, this is how many staked RSR I have, and this is how many RSR that staked RSR is worth right now. So if I were to withdraw, I would get that many RSR, and that number then just ticks up over time.
Okay. And just a final thing. I promise it's my last thing. Regarding, so you mentioned like you could take that staked RSR and move it around and do different things with it. So if there were, say, like a RSX trading pair, so you could take your your staked RSR, and then trade it for, say, USDC. If there's a staked RSR USDC pair, then you could just sell straight for trade
Yep.
it for USDC.
Yep, you could. And what's so cool about that is it makes it so that if for some reason you want to exit that position in a hurry, you're allowed to do that without actually reducing the insurance that's available to that R token, because that RSR that you've sold is still staked. So whoever acquires that position, they're still subject to the same unstaking delay that you would have been. So even though you can't decide, I want to sell my staked RSR and then unstake within 30 minutes and go sell it, you can sell that staked RSR position because it's tokenized.
And what impact would that have on the market? Say if there's a big whale that trades for USDC, would you see that in like the circulating supply, like in the open market?
So it's a good question. I can speculate on this, but keep in mind this is my speculation. So if let's say that there was, like you said, a really big whale who sold a lot of staked RSR on, say a DEX for USDC, and that drives down the staked RSR market price. There's a question of like, well, what impact does that have on RSR generally? Well, on the one hand, the RSR that is attached to that staked RSR is still just locked away in the staking contract. So there's no direct, market impact on RSR. However, it might mean that someone can see, well, wait a minute, there's now a discrepancy between sort of the market price in US dollars, say, for staked RSR, compared to the market price for normal RSR. Basically I can buy staked RSR for cheaper because that market price has been driven down. Then I would be able to buy normal RSR. So someone could go buy a bunch of staked RSR and then initiate the unstaking process, wait however long that takes, and then sell that RSR, hopefully, from their perspective, for more money than the amount that they spent to buy it. However, it's not a pure arbitrage opportunity because of the fact that there's that delay between starting the unstaking process and actually receiving your pure RSR again. And Taylor, this is a moment if you want to comment. What is your current expectation for the default unstaking delay?
I think we're talking 2 weeks right now still, but I think we don't feel like this is completely nailed down.
Right.
I want to just throw in the reward period. I think we've decided to get rid of, and when I say I think, I mean we froze the code on Friday and we got rid of the reward period, such that rewards can just be claimed whenever it's gas efficient to do so, which is an interesting addition.
Got it. Okay. Yep, that makes sense. So yeah. So with let's imagine it's 2 weeks delay to unstake, and notably, this is a default parameter that we're talking about, but this is something that can be set on an R token by R token basis by the governor. So ultimately, it's not even our choice, but we do try to keep in mind rational values for each of these variables as we're programming it to make sure that we're not, that we're not sort of creating a variable that doesn't make sense. So if there's that 2 week delay, maybe you can go buy staked RSR for 5% or 10% less than RSR. You're then taking a leap of faith that that discrepancy will remain for 2 entire weeks for you to then be able to sell the RSR for more money. And so because of the fact that there's that delay, I think that staked RSR and RSR might kind of float up and down against one another a lot more than if that was a pure arbitrage opportunity where you could just immediately unstake and go sell for a greater price. Does that make sense?
Yeah, it makes perfect sense.
Yeah.
Yeah, I think you answered that really well. I understand. I hope everybody else does. And just before I hop off, I just kind of want to thank you guys, the whole reserve team. Like, I'm sure it's not hard. It's not easy to be on your side of things and see what's going on Twitter and everything. And you must be so frustrated that you're like, there's a bunch of misinformation and FUD, and you're like, well, no, that's not actually what's going on. But I know you're trying to find that right balance between like concentrating on the protocol and also timing when it's right to release some information for everybody else. So, but thanks for that, and I know there's a lot of people behind you guys, and what you guys are doing is great so far, and let's hope it continues.
Thanks. Yeah, I really appreciate that. It is definitely a very tough balance to decide, when to focus our effort on communication versus implementation. And obviously, we have built out parts of our team that do those different functions. It's not that we only do one or the other, but I definitely, looking back, I wish that we had been even clearer about a lot of these protocol updates, and it's still very important to do so. Um, but yeah, it is also tough at times. It really gets to me to be called a scammer, and it really gets to me when people think that our team is dishonest, because it's just really not true. So that does really bother me. But at the same time, I own that some of the sentiment that's out there is our fault. It's there are things we could have done better in order to to inform and help sort of curate the community. So I don't entirely blame those fudders, even though they can they can get to me and be pretty frustrating at times.
Perfect. Thanks, Flamingo Mafia. I appreciate that. I'm just in order of questions. I think CeeLo Whale, I see Burner really wants to ask. So I was wondering, CeeLo Whale, I've just brought you up. Do you want to ask a question to Nevin?
Yeah, thank you so much. Just for some quick context, I'm a protocol builder on Celo and actively considering switching to other stablecoin networks. Reserve is certainly top of mind here. Nevin, I just wanted to start out and say congrats on how far you've come, both from the app and the protocol side. I had a specific question with regards to the application. If I understand correctly, I think a big part of your success was really tackling a challenge head on that most of these like SF based teams are too scared to do, which is cash in, cash out. And particularly in the markets that you guys are deploying to, like Venezuela, most of these companies won't touch it with a 10-foot pole. They won't even make the app available in the Google Play Store there. So I was wondering, could you maybe share some insight on what worked extremely well for you there? I know you guys did like cash delivery. That seemed pretty novel. Yeah, could you just maybe speak a little bit to like what was successful for you guys for cash in, cash out? And then I have one follow-up question on that. Thank you.
Sure. So yeah, a couple things to say about that. I think first off, it's like our team decided to focus on Venezuela in particular, because we saw signs that it was, maybe the part of the world that could use this the most. But then it ultimately, I think we've only really made it this far because of the fact that I met Gabo, who is Venezuelan, who is extremely passionate about making crypto work in Venezuela, who had tons of experience there before. And he was able to construct a whole team of people, many of whom are Venezuelan, many of whom had been in the crypto industry there for a while. And so, it would have been extremely difficult for us in SF to figure it all out from afar. It's something where, it was really only possible because of him and because of that team that he's built. In terms of mechanistically, what worked and what didn't work, we did decide for the time being not to do those cash transactions, basically because dealing with cash becomes more sensitive and more political compared to allowing people electronic liquidity with local currencies. So we did that trial. It was cool. Some people liked it, but ultimately, it's it's logistically complicated. It's more expensive to the user because of that logistical complication, and the political challenge caused us to decide not to go forward with it for the time being. That said, I really, really would love to be able to offer cash liquidity in a whole bunch of different countries around the world. We talk about going to market in Lebanon eventually. Who knows when we'll end up doing that? But that's an example of a place that's heavily cash based. In Venezuela, they use cash US dollars now, but with the Bolivar, they use almost no cash. So it's actually much more feasible for us to do everything electronically in Venezuela. In a place like Lebanon, it really seems like cash is crucial. And so there's sort of a further hurdle for us to eventually overcome. In terms of what has really worked, so I think the key insight that allowed us to make things happen in Venezuela is that there are in any economy where a currency is going through massive devaluations, there still is significant liquidity between that currency and, say, US dollars, because of the fact that lots of entrepreneurial business people create informal foreign exchange businesses. And what I mean by that is, it's like if you have large businesses in a place like Venezuela who want to convert their Bolivar holdings into US dollars, they have to make the trade with somebody. And so there ends up being an available business opportunity to be a market maker, to basically allow people to trade in and out. And some people do this formally, working for a bank with like a trading desk, but there's a lot of informal foreign exchange that ends up happening as well. And when I say informal, I don't mean illegal. It's usually legal. And some of these entities even pursue licenses and so on, but they often start out informally. And so what we've done that's really allowed us to provide excellent service to people in Venezuela is we have carefully built a network of those existing informal foreign exchange brokers. And so we've developed software to plug them all into this marketplace that we've built, and to help them automate their banking operations and so on, to the point where if you're a user and you want to, say, make a withdrawal from your reserve account into Venezuelan bolivars, you can do that usually in like 20 or 30 seconds. You tap some buttons in the app, and then you get automatically connected to one of a couple dozen liquidity providers who are plugged into our system at any hour of the day. And then some automated things happen for them to interface with their banking accounts, and bolivars get delivered to your account. But the fundamental insight that got that whole process started was just that the people and the traders are already there, and you just have to find a way to get in touch with them, and explain sort of what you're trying to do, and bring that momentum together. And then over the course of time, the more users we've gotten, the more volume we've gotten, the more attractive it is for those traders to come be a part of our network. And so now, like at the beginning, it was sort of like a huge win to like get a new trader to be part of the network. Now, I don't even know how many we have. Like, I don't even pay attention to that anymore because it's kind of just snowballing. So I think that was kind of the key thing that made it possible.
Wow, that was a great explanation there. And it just sort of sparking a couple ideas. So building on Cello, one of the biggest challenges, especially the most recent product we're building, is a DeFi wallet. And the biggest challenge that we're facing is cash in, cash out. We're doing the same sort of work you guys are doing, which is basically a bunch of due diligence on what the different providers are, and then trying to build software to automate the interactions with it, both for users and for developers. But it's been a pain. So a question I have is, do you plan on productizing that, like turning that into an API or SDK? That way builders like myself can super easily build applications on top of Reserve and piggyback off the awesome infrastructure you guys have built out for the different cash in, cash out providers.
Yeah, I would say we talk about that API direction, once every month or two, and we kind of consider like, should we be doing that now? Should we wait and do that later? At this moment, it's not concretely on the roadmap to do that. I think that the API access that we offer initially will probably be simpler, more sort of less platform level, more like making it so that businesses can automate their payroll and other sort of like automation level things like that. Making it so that like delivery apps have like an easier time integrating with our system so that users can pay with it. But in the long term, I would love that. I think it'd be super cool if this whole liquidity network that we're building, if it ends up being worldwide, which is our goal, and if it ends up being fully programmatically accessible so that you don't even have to use our application to access it, it could, like you're saying, just be accessed via an API from other applications. I think that'd be great. So I think that I honestly believe that that will happen, but we don't have any particular timeline for doing it.
Gotcha. And then just, sorry, one last final thing. I would highly encourage you to do that, just because, again, as a developer, if you're building consumer-facing applications, cash in, cash out's the hardest thing. You can build a protocol, but if you have no way to onboard new users, then it's kind of futile.
Totally,
and then
totally.
Just the earlier second question I had from previously, could you clarify? So Mainnet isn't live yet. So could you clarify how you guys are able to process transactions and not be on Mainnet? Like, what's the legal framework there that makes you guys
So,
not official money transmitters?
Well, we are money transmitters because of the fact that we hold the crypto assets on behalf of our users and allow them to transact inside of our database. That will not be true forever. We actually have plans for how we will transition the application to be user custody and for those transactions to happen on chain. But with Ethereum L1, that just wasn't an option, right? That's kind of like one of the things that's cool about the Celo approach is that ordinary people can transact on chain. But to get at the heart of your question, there is a version of the protocol on the Ethereum mainnet where you can lock up collateral assets and mint reserve stablecoins. It's just really simple and just doesn't have all of the features that we had originally conceived of. So basically, we launched a simple version of the reserve protocol at the beginning of the project, and then we spent a lot of time building this application, making that stablecoin useful to ordinary people. And now we've gone back and we're implementing the full version, sort of that original vision of the reserve protocol with some modifications that as we've discussed on this call to add that additional functionality.
Hey, Nevin.
Awesome. Thank you.
I did have a quick question.
Great to meet you. Thanks for the questions.
One of the original reasons I was kind of interested in the project here was kind of the tokenomics and the burning of RSR coins. I just want to kind of ask you a quick question. Are there any plans to bring back burning or anything like that? And kind of what was the reason for kind of moving away from that?
So, well, I'm not sure if you were here for the beginning of the call, but we discussed that for quite a while at the beginning, and it is recorded. So I would say check that out. The short answer to your question is we think that it makes more sense to distribute the value that would have been used to burn the coins directly to the RSR holders. So it's like if there's X amount of revenue, distribute that directly to the RSR holders instead of using that to buy and burn RSR. So that's how the updated version of the protocol works, and we don't expect to change it back to the burning mechanism.
Awesome. No, that makes a lot of sense. Thank you.
Yeah.
If I can just layer one thing on top there. So there's a question of like what actually causes, well, people tend to believe this, what actually causes the price to go up when burning occurs. And one answer to that could be, well, buying occurs on markets, right? I wanted to flag that this version of the protocol, we actually use the revenue collateral assets to purchase RSR and then hand that out as a dividend. So you sort of have this double effect where you have the buying on markets that you would expect during a buyback scheme combined with the dividend that you actually receive in your wallet in the form of a increased RSR redemption rate.
Yeah, that's a good point.
Sorry about that.
And so let me just add like a little bit of background for that. So basically, it's like if a reserve stablecoin generates revenue, let's say it generates $1 million in revenue, and then it needs to distribute that revenue to its RSR stakers. That revenue is not initially in the form of RSR; it'll be in the form of that R token. But that R token's smart contracts will then basically launch an auction and auction off that R token, or in the future, it might just trade them directly on DEXs. for RSR. So like Taylor's saying, the R token will automatically buy RSR off the open market. And then once it's done that, it will distribute that RSR to the RSR stakers as revenue. So you do get that, like basically what that means is if RSR stakers are just earning that revenue and they're not unstaking it and selling it, then over the course of time, naturally more and more RSR ends up being part of that staked RSR pool and sort of taken out of the liquid circulation. And so if you hold RSR and you don't stake it at all, you might still see a price increase from the fact that less and less liquid RSR is circulating and more is being bought and put into that staked area. However, those RSR stakers, the difference is that RSR isn't burned, right? It's distributed to those RSR stakers, so they benefit from that directly, but they could then unstake it and go and sell it if they want to convert it to, some spendable form of money. So, there's still an open question about like, well, what is the macro effect over the long period of time? It's not quite the same as burning the tokens because they can eventually be released into the market if the stakers choose to.
Okay, Mug, I think that you've been waiting. I'll just add you in and see what question you have as well. And anybody that wants to ask a question next, I think B Monk, I'm going to bring you up next as well. So Mug, if you're there, if you want to ask a question. Maybe not. I'll just bring up B Monk here and see.
Can you hear me?
Here comes. Oh, there you are. Perfect. Yeah, go ahead.
Yeah. Hi, I'm Mark, and I'm really honored to have this opportunity to talk to Sir Nevin Freeman. And I got some questions from the Korean community where I have some investors of RSR. And my first question is, which countries or continents will be the next target area for the protocol?
When you say for the protocol, do you mean for the Reserve app or
the app and the service?
Got it. Gabo, do you want to talk about that? Gabo is here on the call. We could bring him up.
Yep. Invite to speak. Right, here he comes. If he's listening, I sent him a request. There we go. Maybe while we're waiting for him to come up, Mug, did you have a second question that you wanted to ask? Maybe.
Hello.
Actually, I cannot hear you clearly.
It's okay.
We've got Gabo, so go for it, Gabo.
Okay. Yeah, well, basically we have been working to open in Mexico. That is our next big market that we are planning to open. Basically, one of the key go-to-market strategies to select which markets we are opening is basically adjacent use cases to the current use cases that we already have. So we are going to countries where there are a lot of migrants between the different countries that we are offering services. So the remittances, that is a very solid use case that we have seen initially in many of these countries, can be the initial feature or the initial use case that will be. So likely this year, I don't want to speculate in any other countries beyond Mexico. That is a market where we have been working since last year to launch it. There is, of course, we are targeting after Mexico to start somewhat of a pilot in the US, given the use case of remittances. But again, we are not committing on a particular time, because the most important piece is to provide a quality service there, and there are many regulations because of how we currently process transactions on the app that we must comply in order to offer services in these areas. On the meantime, while we are currently on a centralized stage on the app and we are not fully on chain, that is going to be a future project on it.
Yeah, totally. So yeah, it's a really good point. It's like once we transition the app to being on chain, that actually gives us more freedom in where we offer service. Because right now, if we start offering service in some new country, we could be seen as a fintech company that's doing money transmission in that country. Once we switch to the app being user custody and people doing transactions just on a blockchain, that then it's more like a crypto wallet like Argent, which has no problem offering service to pretty much anybody in the world. So that's something that that's going to be a complicated technical process to do that conversion. It's a little bit similar to protocol development where we can sort of answer questions about what and why, but as we've proven, we can't really effectively answer questions about when, because we just don't know how long it's going to take and when we'll end up getting to it. But it is something that I think will free us up to offering service in more jurisdictions around the world. But then, like on that question of like which continents and like which countries will we go to next when that time comes, I think the actual answer is like we're not decided. Like we actually don't, we sort of have a relatively clear path in Latin America. And I'll mention that, we are working on all the licenses for like US states. We're interested in offering service to people in the US, and that is in line with Gabo just talked about. A lot of people from Venezuela and other Latin American countries come to the US. So there's quite a lot of transactions back and forth. But then beyond that, do we focus on Asia next? Do we focus on Africa? What about Europe? Like, it's actually not totally set in stone at this point. So we're kind of open to argument and suggestion, and we'll sort of figure it out as we go.
Yeah, thank you for your answer first, and I'm really looking forward to see the great things going on with the Reserve app. And my second question is, how is the recruiting plan going on? People think that the slow speed of the mainnet development happens because of the lack of manpower in the team. And as I know of, that the team currently has 4 developers working on the protocol. So how do you think about that?
Yeah, it's a good question. It's a very legitimate question. Recruiting has gone, I would say, actually pretty well. We still want to recruit more people, and we want to be able to recruit faster, and that's kind of a challenge of any project like this. But we have, I think, 4 working on the protocol, and we have, I think, 9 engineers who work on the app. So we actually have a lot more engineers working on the app than on the protocol right now. We thought about in, I forget what month, like the end of summer or so last year, we thought about, well, should we recruit more people to the protocol team? And we thought about, should we take people from the app side and move them to the protocol team? And or should we go out and recruit new people to join the protocol team? And this might sound counterintuitive, but we decided that would probably make the thing go slower rather than faster, because of the fact that smart contract engineering is a very specific thing. So like we have lots of brilliant programmers working on the app side who absolutely could become smart contract programmers, and they actually might do so over the course of time, but it takes a lot of time to train them and it takes a lot of time for them to get up to speed. So as it is, our protocol team has just been able to focus fully on development and on the architecture and so on. They haven't had to spend any time interviewing people, training people, getting people up to speed, all of that. And so, it's not 100% clear. Maybe that was the wrong decision. Maybe we should have tried to add 2 more people to that team. And I think that there is a small handful of people in the world who have the right kind of experience if someone had developed a similar smart contract protocol in the past and they wanted to come join the team and they could get up to speed quickly, I think we'd be interested in that. But those people are extremely difficult to find and recruit in the current market conditions. They're just in extremely high demand. So that's the rationale. That's why we decided to keep the protocol team small. We felt that we would be able to make good decisions and proceed at probably about the fastest pace by doing it that way. But I do think that once the protocol is live, we'll sort of be in a new cycle. And at that point, I think we probably will focus a little bit more effort on adding additional protocol engineers to the reserve team for like future development and changes and things that get implemented from there. So that's kind of our take. That's why we decided to do it that way. And I forget the name. Taylor, you might remember the name of this. There's something in the development world, somebody's law, which is adding additional developers to a late software project just makes it later. And it's kind of because of this. It's like when something is this deep and complicated, you have so much context, and adding new people and trying to get them up to speed ends up actually making the thing go slower rather than faster. So, we've had this conversation a number of times throughout the course of mainnet development, and we usually decide, no, probably the best thing to do is just to stay focused. Taylor, do you remember what that law is called?
I don't know. Sorry.
All right. Yeah. Anyway, it's
You quoted it well, though.
some programmer's name, his law is that.
Yeah, actually that makes sense because trading takes time to
Yeah.
And my third question is on your recent post on the Twitter, said that your goal is to make your protocol and your things like profitable for the bigger projects by staking the team's amount of RSR. That means you have to think about the price of RSR. I really don't want to talk about the price here, but since it will be the source of the continuously run your business, do you have any concern about the price of RSR?
Do I have any what?
Do you have any predictions or plans to make RSR more valuable?
Well, the way I think about it, RSR can be valuable because of the revenue you can earn by staking your RSR. And if it has that value, part of what's cool about that is that it's that can be independent from the price of it. So I guess what I have to focus on is helping the team release a protocol that really makes sense, that's going to be compelling, that's going to provide value to the world, and that that would be something that would be economically compelling to RSR holders. You would end up being able to earn revenue by participating with your RSR. As everybody knows, it's not really allowed for me or for the project to do things to try to influence the market price of RSR directly. We can't go out and try to shill and try to pump the price of RSR. So I definitely think a lot about the value, even just from my own personal position. I hold a lot of RSR, and I'm excited as an RSR user myself in the future to be able to stake it and earn income from doing that. That's a big part of my personal financial plan. So I think my interests are very aligned with everybody else's who's part of the RSR community in that sense.
Thank you. Next one is about the regulation. These days, people are talking about stable coins, and the regulations are getting bold, and it can be a serious concern for investors and users that there are some regulations coming up about stable coin. How do you think about the protocol with the regulations coming up these days?
Well, it's a little tough to talk about, but here's what I can say. um, even if a law was formed that said that it's not okay to mine Bitcoin, would Bitcoin go away? I don't think so. I think that one very interesting thing about cryptocurrencies and applications built on networks like Ethereum, if they're constructed in the right way, is that at a certain point they kind of start to make their own laws, right? The phrase of code is law. It's not always true, but sometimes it is true. And so, on a high level, philosophically speaking, here, I think that if Reserve goes the direction that I think it's going to, and there are many R tokens that are governed in a decentralized way, you really won't be able to turn them off. There's a question about what you'll be able to do with them. There's a question about what collateral assets will be tokenized and available for their backing. And so, certainly it's not that Reserve's future is completely immune from any sort of regulatory pushback. But in terms of the existence of Reserve stablecoins, I think that the way that we're executing it, they will be there to stay in the way that many censorship-resistant protocols on top of blockchains will be.
Okay, thank you. My last question, I'm really sorry because I got so many questions from the Korean community.
Okay.
So the last one is, currently some of minted off-chain RSVs are out there, and it will be on-chain later somehow. How is it going to change the reserve economy?
Well, what do you mean by the reserve economy?
I mean the revenue making economy.
Okay, so when you say the reserve economy, you mean sort of the revenue mechanism within the protocol and how it works for RSR holders, all of that?
Oh yes, it is.
Okay. So I think that in the short term, the main revenue mechanism for R tokens will be basically yield on the collateral being underlyingly lent out. That's what I'm most bullish on for early R tokens. And so with that, what matters is the circulating supply, the sort of market cap of R tokens. And interestingly, that means that it sort of doesn't matter whether the R tokens are used on-chain or off-chain, whether they're used on L1 or on L2s or sidechains. It sort of doesn't matter because as long as the R tokens have been minted, then the capital is available to be lent out and generate revenue. So what that means is that even before the Reserve app, for example, offers on-chain transactions, if the Reserve app users are using R tokens that have that revenue mechanism baked in, then that will be relevant to RSR stakers. It's still very important for us to switch to on-chain transactions, for the reason we talked about a few minutes ago. But regardless of whether it doesn't really matter where the tokens are being held and spent, whether it's in our database or on a sidechain, that revenue mechanism will function regardless. And I think
Okay.
Thank you for those questions. I think, Neve, I think we should do maybe one more round of questions and then call it for today. Gabo and I have a meeting every Sunday. We were supposed to start 30 minutes ago, but I told him it might take a few more minutes. And he's obviously here with us, so I didn't have to message him and let him know. But we should probably transition. We have some things we have to get through today.
Yes. Okay. So just two more. I think B Monk has a quick one there. If I'm just going to bring him, you go ahead there, B Monk.
Okay.
Cool. Thanks, Nemo. Hi, Nevin, Gabo, Taylor. Great to finally talk to you guys directly. So, Nevin, actually, my question is regarding that first potential yield-bearing R token. So, essentially, and it has two parts to it. So, first is after the mainnet launch, how much time do you think it will take to actually get to that first yield-bearing R token? Probably according to your best guesstimate? And the second part is like once that yield bearing R token is live, right, and that savings account use case is live for the reserve app users, uh, what do you think will be the impact on growth of app users itself? Like how much of a driver that could be for the reserve app?
Yeah. Okay. Good questions. So in terms of the time it would take to deploy such an R token after the protocol is live, once the protocol is live, like you could do that in a day. Um, I don't know exactly in practice how that will unfold, but like it's the protocol being live basically means that it's ready for R tokens to be deployed, and so there shouldn't be too much of a delay there. There's another conversation for us to have with the community about that, which is that I I think it's actually better for the whole history of Reserve if if we as a company aren't the ones deploying these R tokens. So I think it's actually going to be better to do that as a community. But that's another topic. We'll get to that. In terms of your question on timing, I don't think it'll take very long. However, if the protocol's live, and let's say that token gets deployed even in the first week, there's still a question of, well, how long should it exist on chain on the mainnet before we encourage people to put, many millions of dollars of value in it? Even though we will have gotten audits and done a bug bounty and so on, there's still kind of the question of like, well, but what if something was missed? And so that's why in our sort of mainnet launch roadmap, we have this milestone of the all clear period. The all clear time is basically when, Taylor and others on our team who are technical, who've been sort of watching and evaluating, are convinced like, okay, it's had enough time. We've seen it. There've been like maybe some of our capital and maybe some intrepid RSR holders have put some capital in it, and it's like, okay, it hasn't been hacked for X number of months, and I do think this is some number of months. It's not a number of days or weeks. It's probably a number of months before our team becomes comfortable that we will put our stamp of approval on it and be like, yes, we think this is safe. We think it's a good idea to put more money into this. So I don't know how long that's going to be. I wish I had a specific time in mind, but 2 months or 4 months both sound like plausible periods of time to me before we would then say like, okay, like go wild. It makes sense to put money in this. And I think you were asking, okay, and that, yeah, you were asking once we make that available as sort of a savings account option to people in the app, which could, that definitely wouldn't happen until that all clear, but it also might take longer because the app has many different development priorities itself. So I'm not sure exactly when that will happen, but when that happens, how much will that impact the demand for the app? Well, we don't know for sure, right? And we don't know for a couple of reasons. One, we don't know exactly what our user population cares about in terms of that yield, like how much, will they suddenly move all of their money into that account? Or is there some reason why they won't? Will they be concerned about the technological risk? Maybe they don't understand DeFi, so maybe that will go slower. Maybe they'll have to learn over the course of time. There's also the question of like, well, what will be the yield on that R token by the time we get there, right? Like it could be that because of the overall market conditions in crypto, maybe the yield on that R token isn't super high in the month that we launch that, right? Because we are still subject to the DeFi market forces, right? If the lending markets in DeFi are paying high yield, then R tokens, then this R token that we're talking about would pay high yield. If they're paying very low yield, then this R token will also pay low yield. So that's a variable that we don't know. And we actually, as a project, we did an experiment, like a year ago or maybe more, where we offered small amounts of yield, well, actually small and large amounts of yield to users of our early application to sort of try and see how did they respond to that. And we've done a number of experiments like this over the course of time. And one thing we've learned is that when you try to construct an experiment like that, it's very hard to make it exactly like the real thing. It's very different as a user to be sort of part of like a weird beta program where the thing's kind of hacked together compared to getting the fully polished product that's like fully baked and fully thought through. And so we have a little bit of data about how people responded to that, but we've seen over and over again that like people respond differently once you have the fully baked thing. And I say that because like internally when we ask this question of like how much is it going to impact demand, I think we've sort of realized like, well, we don't really know until we offer it to the market and see what happens. And so because of that, we're just not sure. I think we definitely want to do it. I think we definitely think that it's a obvious benefit to our users. I do think it's going to increase demand, but how much? I think we just don't really know.
Okay, great. I think last question. I'm just going to circle back to Flamingo. I think he's got something that he wants to ask, and then we'll probably wrap it up there.
Okay.
Yeah, hi Nevin. This is more so a question for the community because I've seen a lot of frustration regarding this. So if you want to kind of put out a statement or something to kind of give your take on it, it's regarding I guess the comparison between RSR and RSV or R tokens, how there's virtually no attention given to RSR, and a lot of people are frustrated about that. Is that because you and the team believe that if our tokens are successful, I know you've said it in the past, that will drive demand for RSR organically? Or do you see eventually more focus being put on not necessarily marketing RSR, but just educating people on RSR? Thank you.
Yeah. I think the crucial point here is that we have never been allowed to, and we are still not allowed to, market RSR as an investment opportunity. And so we don't. And there are different things that you could take from that, right? It's obvious that we can't go out and say buy RSR because it's going to be worth so much more. But there are a lot of things that I think our community wants us to do to basically induce more people to find out about RSR and buy it. And this is something that many crypto projects do. Many crypto projects, without saying it, they actually are marketing their project as an investment opportunity. They're trying to hype up their coin so that more people find out about it and buy it so that the price goes up. And that's either so that they personally can sell it for more, or so that their existing holders will be happy because they could sell it for more. And do not get me wrong, I definitely want the price of RSR to be high. I hold RSR myself. I care about that financial outcome, and I care about it. I want the financial outcomes for all existing RSR holders to be good. But we just take it very seriously that it's not legal and it's not ethical to just try to perpetuate a cycle of more buying just so that existing token holders can sell their tokens for more, right? It's like if we do that and we just bring in lots of people who don't really understand the protocol and they just buy it because they think it's going to go up, well, yeah, maybe that means that existing token holders can sell their tokens for more, but they've just sold them to new buyers who now just have bought that coin. And what's their financial outcome going to be? So we don't want to perpetuate a cycle of buying that that might be good for current holders, but just put new holders in a tight spot. Instead, we want to release technology and build a movement that generates real economic value, that is actually sustainable, that's actually providing something useful to the world and bringing in money from ultimately customers, not just speculators, right? Like when a reserve stablecoin lends out its capital or charges transaction fees, like fundamentally there's someone who's receiving economic value that's has nothing to do with RSR speculation, and they're paying for that value, and then that value is making it to the RSR holders. And so that's a form of economic function that we believe in, that we think makes sense. And so that's when I think about making money myself as an RSR holder and other RSR holders making money, that's the mechanism that ultimately I think makes sense to focus on. There's one more thing I can say, which is that we can't really market RSR as an investment opportunity. We can market it once the protocol's live as as an interesting crypto asset that you can use and you can take action with to make money yourself, right? Like once staking is available, once our tokens exist, we're very free to go out and say, look, hey, here's how this protocol works. You can buy this token, you can use it this way, and here are the returns you can earn from doing that. Because that's not something where we're saying, hey, you're going to make money because of our efforts. You're just going to make money because of this speculative thing. It's saying no, here's this cool new economic mechanism that you can participate in. Buy this token, that's the way to access it. And then you can, actually you do have to make some decisions and do some work and provide some value to the ecosystem in order to participate. But in doing so, you'll then earn these rewards. And so I think once the protocol is live, we will be more free to actually do that. Like when we're talking about it now, it's still a little bit speculative. We're still talking about the future. We're still talking about a promise. We're still talking about something that we've decided to do and we're doing, but it's not there yet. You can't go buy RSR and use it directly yet. So I do think that the conditions will change a little bit after Mainnet in terms of our ability to describe and sort of advertise that opportunity for how you can directly use RSR. The other thing is that we can market our tokens. We can talk about the benefits of different R tokens. We can go through efforts to get R tokens to be used and adopted, because when we go say, hey, we think it might make sense for you to buy this R token because of its financial and economic properties, if we perpetuate a lot of people buying R tokens, that doesn't cause the price of the R token to go up, right? They're stable coins. So there, it's not an issue of us, basically causing some sort of speculative bubble or marketing R tokens as an investment opportunity that's based on our efforts. It's like, nope, it's just there. It's a decentralized protocol. Any money you make isn't because of us. It's just because of how the mechanism works. And so there, it's okay for us to actually go and market those R tokens. Now, I don't want it to be that marketing of R tokens and distribution of R tokens is always dependent on us. I do think in the long term, it's much more healthy if it becomes a whole decentralized ecosystem, similar to how there's no company that's in charge of marketing Bitcoin, but there's lots of people advertising and marketing Bitcoin all the time. So I do think we want to get to that ecosystem scale eventually, but we're not going to be nearly as restricted from marketing R tokens as we have been from marketing RSR, both morally and legally. And I hope that's helpful.
It's I think for everybody on Twitter, I have to say on behalf of everybody, we are thrilled to have you here, and it really has helped with a lot of uncertainty, and I certainly feel way more open and aware of what's kind of happening. And Crypto Attorney just messaged me to say it's Brooks Law. That yes.
Awesome.
So anyway,
Awesome,
I'll let you go, get to your meeting, and again, appreciate you so much, and thank you for coming on here.
Yeah, thanks for having me. This was great. Thanks everyone for tuning in. I hope the recording worked. And I didn't get to record on my side because I had to use my phone instead of my computer. So Neve, I'll leave it to you to share that recording, and I'll help promote it. Yeah, thanks everyone for coming out. And Gabo, let's hop on Discord in like 5 minutes. A little bathroom break here.
See you later.
All right.
Bye
See you guys later.
Take care, guys. Bye.